Tweezer bottoms and tops are also reversal patterns that occur after an extended uptrend or downtrend is observed. To identify tweezers, here's what to look for. 2 consecutive candles with shadows that are of equal length. Bottoms should have equal lows, tops should have equal highs. The first candle should be of an opposite type when compared to the second candle. Tweezer bottoms are a bullish reversal pattern and should be found at the end of a downtrend, thereby signaling that a change in price direction upwards is incoming. With tweezer bottoms, the first candlestick should be bearish, following the market sentiment in a downtrend, whereas the second candlestick is bullish. Both candlesticks should have the same lows, with their lower shadows having the equal length in order to achieve this. Tweezer tops are a bearish reversal pattern and should be found at the end of an uptrend, thereby signaling that a change in price direction downwards is incoming soon. However, with tweezer tops, the first candlestick should be bullish in nature to match the current market sentiment in an uptrend, whereas the second candlestick should be bearish. Both candlesticks should have the same highs, with their upper shadows being of equal length to achieve this. Let's look at an example of tweezer tops and see what happens. As you can see, the 2 candlesticks after the extended uptrend had the same highs, with the first being bullish to reflect the bullish sentiment of the uptrend, and the second being oppositely bearish in nature. What do you think is likely to happen here? Evidently, since tweezer tops are essentially a bearish reversal pattern, you should see a steady decline in price from there. This is exactly what happened, as the price fell from 1.19733 to 1.16164 after the tweezer top setup appeared by about 356 pips. If this helped you understand better the topic, make sure to like, subscribe and hit the notification bell so you don't miss the next video on Harami, a double candlestick setup.